Welcome, guys. If you're here with us, please share the link. Share the link. Let me do so now to the community, the mentorship community. Please okay, I've confirmed I can be heard, and I'll share the link now to the community. I'll ask you to do the same, right? I want today's forex analysis to be very, very short. Okay, in the next 5 minutes we will start. Let's wait for people to join. We'll start in the next 4 minutes. Okay. All right, I believe you're here. Yesterday was, sorry, last week was really, really interesting, very peaceful. I think total of last week was about close to 600 pips, close to 600 pips. That means if you had picked a good swing trade, that lecture is pending. Like I said, I'm going to be dropping that lecture once we get to 2,000 subscribers. So once we immediately get to 2,000 subscribers, remind me. So if you had picked a swing trade, you would have gotten up to 600 pips profit. I had multiple trades last week, very, very good trades. Monday, the one I took on Monday, the first one, was supposed to be about 27 risk to reward ratio, but I got stopped out. My profit broker stopped me out due to spread. I shared that in the community. It was not even up to my stop. It did not get to my stop loss, but I got stopped out. But later on that day, I still picked a 2 weeks to reward ratio trade. Then Wednesday, about 6 weeks to reward ratio, and Thursday 6, Friday was just killing, finishing about 15, something like that. 15, I closed early and the market just keep pumping. I regretted though for closing early, but that's the reality of the market, right? So yes, sorry, last week, I keep saying yesterday, last week was a very, very good one. What I'm going to start doing right now is starting from this week, I'll be doing weekly forex review, like market review for only Nasdaq, because Nasdaq is the only thing I trade. For forex analysis, yes, I'll be doing um other currency pairs too. But for our weekly review, to be on Nasdaq only, which I'll be dropping them I think on Friday evening. Once the market close, you get to watch the way I view the market during the week. You study those things during that weekend and study the lecture I'll drop for that weekend. So that's how I want to be scheduling the topic: weekly market review on Friday, weekly forex analysis on on Sunday, right? So if I had done weekly market review for last week, you would have seen everywhere I picked my trade, every trade I picked, and every my entries and how I look at this market and everything. It will help you, right? To help you to at least those of you that are suffering from poor execution, it will help you. So you see how I pick all these trades. So at least you can go and study it and see how you could also pick those trades in the coming week. This is something that will that will help you very well. Weekly market review be starting from this week, right? So this week is going to be tough. Yes, I'm saying it. I'm telling you now, in case you see anything, in case you get to draw down, or yes, last week. I don't know why I keep saying yesterday. Okay, so last week, many of you passed your phase one. Many of you are in profit because the week was just buying. Everything on the weekly MD showed itself last week, and this week, I'm telling you now, if you can risk less, then risk less. This week is going to be very tough, very very tough. Why am I saying that? Because first, on Monday is bank holiday. We have bank holiday on Monday. That means I'm not going to be trading on Monday, which is tomorrow. The market will not be that volatile for you to trade. The market will be moving, of course, but it will be very choppy and slow. So that's how bank holidays are. So since I'm based for you that are trading, let's say Australian dollar, Canadian dollar, and all of those things, Japanese yen, and all of those things, those markets will be moving very well. But any market paired with the US dollars that has anything to do with the US dollars will be very slow tomorrow. And since I trade the Nasdaq, which has something to do with the US dollars, it will be very slow, and that means I will not be trading in to them tomorrow. Okay, bank holiday. You can check your Forex factory calendar. And also, this week is NFP week, and you know how we do it. NFP week, we don't trade on Thursdays and Fridays. So, thereby saying I have only Tuesday and Wednesday to trade for this week. Possibly, I could get maybe up to 5 risk reward ratio or 10 risk reward ratio. I'm out of the market till next week. So, this week is going to be very tough. Bank holiday, people will still be squeezing, be forcing trades. People just want to get trades. I know there are people that. Thursdays and Fridays, even if I'm saying I don't trade on Thursdays and Fridays, I don't want to trade on Thursdays and Fridays. There are people that will still want to trade on Thursdays and Fridays. Not that there's anything happening that day, just that that day is very very um risky, and market is very unpredictable that day. Well, anyways, let's get to the business of this week. So this is for Nasdaq. I'm sorry, this is dollar index, right? Everything we are saying for dollar is plain, but recently Nasdaq is no more inversely proportional to dollar. I don't know what is happening, but this thing just happened, right? Normally it's always inverse, but recently it's no more inverse. Nasdaq is pumping, dollar is pumping, and it just keep getting. That's why I don't too much rely on the correlation stuff. I analyze my market. I use the correlations just in case I'm not seeing a clear bias. If I'm not seeing a clear bias, then I use the correlations. Anyways, for dollars, you know what we normally expect, right? This high, my eyes is still on these levels. I don't. It might take the end of this year, or it might take 2 to 3 years. I'm sorry, 2 to 3 months before price gets to this low. But I'll always point out that low, just like I was pointing Nasdaq high for over 4 months, and price finally got there. That's what we call long-term bias or long-term drawn liquidity, any I want to call it. Either way, we have this order block here. You can see there's a tiny fair value gap there. This is the weekly time frame, okay? This is a weekly time frame, and there's a tiny fair value gap there. This was the weekly drawn liquidity wanted price to approach, and price did that, still giving us um more bullish momentum. Like I said many times, that when you have a drawn liquidity marked, does not automatically mean that price will reject from that level. Price might keep going further for that drawn liquidity. You just want to get the necessary confirmation for you to know if price is going to reject from that particular level, right? So we saw price keep heading for this other draw liquidity, which is the weekly order block. That weekly order block, my eyes is there. And first, if you want to mark out the CE, you know what I mean by CE. If you've been on this channel for quite some time now, you know what I mean by CE, consequent encroachment. You want to mark out the consequent encroachment, so you can see this is the equilibrium of that um candle, but I want to be looking for the equilibrium of that week, right? The equilibrium of that week is where I want to be looking for price to come and rest for. So the next coming weeks, or this coming week, I'm still seeing dollar to be bullish. Yes, I'm still seeing dollar. I don't say Nasdaq. I'm not saying Euro USD. I say dollar. I'm still seeing dollar to be bullish to the CE of that week on that candle, that daily candle. Now let's go to the daily time frame. What's interesting on the daily time frame? You can see just at that weekly candle CE, we have a volume imbalance there. That's our volume imbalance just at that CE. So you can see that that place has double confluence, that price is likely to head into there. That's where my eyes is. If this was tradable, or I wanted to pick any trade with the dollar right now, I'll just look for one swing trade. But unfortunately, I'm not a swing trader, and that is where my eyes is right now. That's daily volume imbalance, weekly candle CE. That's where my eyes is. So that's our drawn liquidity. So we'll check on that in the coming weeks, right? So let's look at go back to the weekly time frame. Let's look at Euro USD and what it's doing. Okay, so I have not cleaned any marking for Euro USD. You can see what we outlined for Euro USD still doing exactly that. I had this buy side liquidity marked. I will still see price, just like I have those sell side liquidity on dollars. I have this buy side liquidity on Euro USD. So if once dollars start going for that sell side liquidity, Euro USD will start going for this buy side liquidity. It's just pretty simple. It's inversely proportional, right? And I wanted price to trade into this volume imbalance. Now, if you check very well, this is the weekly time frame. This might be confusing, but this volume imbalance is the NWG. Yeah, hearing that for the first time will be like, why is there an NWG? Yes, it is the NWG, sorry. That's the new week opening gap, and price treats the new week opening gap exactly the same. You know, the breakout and the retest. Why is it? Why you might be asking, why is it the weekly opening gap? Okay, this is a weekly candle, right? So first we have the opening, which is at the bottom, and the closing, and the week closes at what? Friday. The week closes at Friday. So this candle closed at Friday, exactly Friday, 4:59 p.m. New York time. This candle closes. Sunday, the candle opens. So you can see the next week opening, leaving that gap. That makes it the NWG. I know you guys are used to checking your NWG on the hourly time frame, 15-minute time frame, 1 minute time frame, 5 minute time frame, and so on. But this is the NWG can be a volume imbalance on the weekly time frame. Know that. Go and study. Don't take my word for it. That's my disclaimer. Don't take my word for it until you study it. Okay. So we have that NWG, and what happened there? Price rested there, gave slight rejection, then broke through that NWG and retest. So you can see see it very well, see the retest very well. You can see Friday after breaking, Friday on Euro USD retested that level. Algorithm, not buying and selling pressure, not anything, just algorithm, right? Price retested there on Friday, heading for where? Continuing the bearish momentum to this daily volume imbalance, right? Daily volume imbalance. Now, if you check, this is also NWG, and it might reject here, right? It might reject here and start heading higher, or it might break out and continue to go down. Why? This is NWG. You can see this candle is Friday. Friday closed there, Monday opened here. That week opening gap, that's NWG. So I'm expecting price for this week on Euro USD to trade down there, right? So if you are trading Euro USD and want to start buying during midweek or anything, you okay, let me not say that, because it'd be like I'm the one controlling the market, right? But anyways, my bias for the week on Euro USD is at least bearish to this level. From this level, I don't know what's next. It might start rejecting or might keep going further. Whatever reaction you see there, is what you trade. If it breaks through, just like it did to this and new week opening gap, it will retest and continue downward. That's just it. And this new week opening gap was since on March. So that's March new week opening gap about 3 months, 2 months ago, something like that. So you can see price still respect all those levels, right? So that's that for Euro USD. For those that are trading Euro USD, I'm giving you an insight, right? Let's go to GBP USD. GBP USD weekly time frame. Okay, so I still have this level marked out. This volume, this weekly fair value gap on GBP USD. I still have that marked out. Yes, I'm expecting price to reach there. It might take 2 to 3 months. It might take 4 months. It might take, might be next year. I don't know. I don't care. That's just my long-term drawn liquidity, right? That's what I want. I want to see GBP USD price into that, and I think we'll see that in the future by God's grace. Anyways, we still have this volume imbalance, which is also NWG. You know, these are weekly candles. So when the week closes, that's Friday close. When the week opens, that's Monday opens. Right? The new week opens, and that's the new week opening up. And I'm seeing price magneted to that area. Price is heading for that area. So if you are trading GBP USD, my bias for GBP USD is still bearish. Mark those levels. Set your alerts in case price drops into there. You remind me, right? Or we will talk about it in our next um forex analysis. Right? So let's go to the daily time frame. Okay, so this was the fair value gap, the CB, sell side imbalance, buy side inefficiency I pointed out to on GBP USD. This was it. I wanted price to trade into, but price did not trade into it very well, like I expected. That means that will be our drawn liquidity in the future. But first, we need to see GBP USD, yeah, before we can call it a let's say end of the week or anything. Let's see end of the bearish movement, right? Although we still have more draw liquidity below here. You can see all of this draw liquidity, all of these fair value gaps are always magnets to price, and price is likely to run into all those levels, right? Price is likely to run into all those levels. Anyways, I want to see price drop into this level first. Whatever the reaction is here, this is NWG, so you know what to do. If price breaks there, then you expect a retest and you look for the next drawn liquidity. Otherwise, price will just start rejecting from there. This thing is pretty simple. It's not as complicated as you think. Trust me. Give it time. Journal your treats. My current journal is already getting full. Already getting filled up. Sorry, about 150 leaves. I think so. 150 leaves. And I don't just write things here because I feel like writing. No, I write observations, daily observations. As I'm looking at the market every week when I'm studying, I look at something new. I write it there, and I'll go back in time 2 months, 3 months, study these things, and this is how you learn. Trust me, I've improved a lot with this method. In the past 1 year since I started journaling, I've improved a lot in this method. Trust me, you will not improve. When I wasn't journaling, it was just like whatever I learned, I'll just go and start doing it by myself and try to copy and paste every strategy or everything my mentor said. But that was not right. When I started learning ICT, he gave me some tips on journaling, and I'm giving you some tips, and I'm telling you how helpful it is. Journaling is very helpful. You go back to your journal sometimes during the week when you're less busy and read all the asterisks. I like using my observation. I like using asterisks for my observation. If I observe anything new in the market or anything I'm just noticing for the first time or the second time, I'll use an asterisk, write it there. When I come back to it, like maybe after 2 months or 3 months, and I come back and I'm reviewing my journal, and I find out that maybe that observation I made was not um right, then I'll make sure I like give it a cancel signal, something like a cancel symbol, a wrong symbol, to let me know that that observation was not right. Like maybe I just did it because of the market behavior at that moment. I just saw that particular movement or that particular um observation. I just had that observation because of the market condition at that moment. Trust me, what every the idea about this journaling is do for you to sort out those things that work regularly than the things that work once in a time, right? Let's say we have 12 months in a year. You want to find out something that works at least every week for all the 52 weeks in a year. You want to find out like those things that works every week. You want to see like the weekly AMD. The weekly AMD works every week, every month, every year. You always see it, and those are the kind of things you want to include into your strategy. So I don't want to go and be looking for a strategy or a particular thing that works. Let's say every 3 months or every it's not going to help me, right? That will not help me. Or every 1 year, something that happens once in a blue moon. So those kind of stuff. Those are not the things I want to be including in my strategy, right? Those will give me kind of too much information. These things are well arranged for you in episodes for you to learn them accordingly and study them so you know what to pick out from what I'm learning. I'm teaching different things: NWG, NDOG, weekly AMD, all sorts of things, FVG, and all of that. Simple entry module. Everything I'm teaching is not a must for you to use all of them, but at least learn them, understand how they work. You can just choose to be trading NWG and NDOG. That's new week opening gap and new day opening gap. It's a very nice strategy. On Monday, you want to use the new week opening gap. You want to use the new trade the new day opening gap for each and every day. When price breakout and retest on it, that could be your only strategy, and that could be what you want to be looking at the market each and every day, each and every week. That could be your strategy, but at least you understand what weekly AMD is. So in case you not see any new day opening gap for that day, you can you get my point. So these are the advantages for these things, right? So let's go to Nasdaq. This is my favorite currently. I think it's going to be my favorite for forever. I just love this particular instrument. I don't know why. I just love it. It's too volatile. You can see very volatile. This is the weekly time frame, and almost every week is just very volatile. At least in a week, you will see price will do at least 300 pips in a week on Nasdaq. At least, not consolidation. I don't mean consolidation. I mean large range, at least 300 pips, and this is very very good for swing traders, right? If you're a swing trader, you pick this particular pair, pick your trades every week, one setup every week, and hold it till Friday, close all your trades and all those things, using the weekly AMD. But I'm going to teach about that, so I'll make it very very clear. No problem. Let's look at Nasdaq now, weekly time frame. So as sometimes this particular pair can be complicated, but trust me, it's simple. But it needs time to learn. It needs time. You need time to study this particular pair, right? So weekly FVG, you can see there. That's last week low and 3 weeks ago low. 3 weeks ago high. Sorry. Let's go to the daily time frame. Although I still have this weekly fair value gap on my radar. Where is it? I need to mark that out, and I'll advise you mark that out too. We are almost into that fair value gap, and I want to see how price will react to that fair value gap this week. We might head into that fair value gap before we start coming for this weekly fair value gap, right? We might head into that old fair value gap before we start coming for this one. Anyways, you want to see the reaction first. You want to see whatever price will do first before you react, right? So aside from that, we still have a volume imbalance here, which was I think NDOG. This was a new day opening gap that was not refilled on the daily time frame, right? So we have this volume imbalance there, and I'm expecting price to either reach for this weekly imbalance before coming for either of these. But these are the levels I'm looking for my daily bias on Nasdaq. I'm not going to be trading much this week. Like I said, Monday is bank holiday, and the price action is going to be very funny. Don't worry, we are going to see it on the mentorship community, right? The price action is going to be very funny. If you're not there, join with the link on the description, right? So Tuesday and Wednesday is going to be my trading day. Thursday I'll rest because of NFP. NFP weeks, Thursday and Friday are always very funny. I don't want to include myself in such market condition, right? You'll see it for yourself if you've not experienced it yet, or you can go and backtest it this night, right? So these are the levels I'm looking for on Nasdaq. I want to see price switch for the weekly fair value gap. This weekly fair value gap might not happen this week. Yes, it might happen the next 2 to 3 weeks. Remember, I told you it's easy for you to tell where price will react to, but it's, let me say, impossible. Yes, for you to tell when price will react to a particular level, except you've upgraded from being an analyst to a prophet. And I'm not a prophet, I'm simply an analyst, right? So I cannot tell you exactly when price will go for that weekly fair value gap, right? It might be the next 2 weeks, might be the next 3 weeks, might be the next 1 month or 2 months, but that's a draw on liquidity. And I'm also seeing this draw on liquidity, and I'm also seeing this draw on liquidity. So if price head for this weekly fair value gap, give me the reaction I want to see there. Remember, remember the reaction we always want to see on this kind of thing, on this in this kind of scenario. So if price should give me the reaction I want to see there, then my bias changed to what? Bearish. Heading to where? To the daily volume imbalance first. If price breaks and retest on this daily fair value gap, then we head for the weekly um, fair value gap, right? Completing all our targets. But anyways, that's my analysis. That's my view on the market for this week, right? So I'm going to stop here. I don't want the video to be too long, and I'll be dropping a lecture during midweek, during the week. A very important lectures. Okay, so subscribe and turn on notifications so you don't miss any of our next live session or the upcoming market review I'll be doing, and any of our lecture, right? We are going somewhere, trust us. We are going somewhere. Without you, we wouldn't have been, we wouldn't have gone this far, right? So I believe in you. Have a good weekend, and also try to study this night. It's very, very important. Trust me, it's very, very important. Study one or two things this night at least. Have something to journal. You want to see that daily improvement every day. You want to see improvement every single day. At least be 1% better than yesterday or 1% better than last week. That's how you grow. Think long term. Think long term. I'm not exaggerating. I'm not saying all these things to make it look sweet or look funny. This is reality. Quit the short term thinking. Think long term. In the next 2 to 3 years, 4 years, where do you see yourself? That's what you should be concerned about. Work for tomorrow's results, not be concerned about today's result. Today's result is teaching you how to be better for tomorrow, right? So you are my favorite person, whoever you are, wherever you are watching this video. And until